Welcome to the International Accounting. First time joining the program, remember to subscribe to the channel. Like, share with everyone. Today we share with you exercises about calculate dividends payable. Now, let's get started. Number 1. Dragon Company declared a $15,000 dividend during the year 2017. The dividends payable at the start and end of the year were $3,000 and $5,000, respectively. Determine the amount of cash paid for dividends by Dragon during the year 2017. Solution. Accounting principle for debts equals beginning of period plus arising debts during the period minus arising. And paying debts during the period equals end of period debts. So arising and paying debts during the period equals beginning of period plus arising debts during the period minus end of period debts equals $3,000 plus $15,000 minus $5,000 equals $13,000. The cash paid for dividends is the balancing figure of above account. $13,000. The cash paid for dividends can be determined by analyzing the T account for dividends payable. This is the T account of dividend payable. Since it is a debit, the balance is on the credit side. Beginning balance $3,000. The credit side of the dividend payable account has dividends declared $15,000, total arising $15,000, ending balance $5,000. We have ending balance equals beginning balance plus dividends declared minus cash dividends paid. So cash dividends paid equals beginning balance plus dividends declared minus ending balance equals $3,000 plus $15,000 minus $5,000 equals $13,000. So the total arising of the dividend payable account on the debit side is $13,000. Number 2. Washington Company declared and paid cash dividends for 2017 and 2016 as shown below. We have 3 columns: content, year 2017, year 2016. There are corresponding lines. Amount, $160,000. $200,000. Declared on December 20, 2017, December 20, 2016. Paid on January 25, 2018, January 25, 2017. Required. On the basis of the above information, what amount would the company report in its statement of cash flows for the years 2017 and 2018? Solution. A simple declaration of a dividend does not affect the statement of cash flows because it does not involve any cash outflows. It only affects the balance in the retained earnings account. Cash outflows occur only when payments are actually made to shareholders. We only report amounts in the statement of cash flows that are actually paid or received in cash. Are cash equivalents. As required by the proposal, the $200,000 dividend declared in 2016 was paid in 2017. This payment would be reported in the financing activities section of the cash flow statement for 2017. The $160,000 dividend declared in 2017 was paid in 2018. This payment would be reported in the financing activities section of the cash flow statement for 2018. Number 3. MIT Company earned a net income of $15,500 for the year 2024. It also provides you the following information about dividends payable and retained earnings accounts at the end of the year 2023 and 2024. Dividends payable on December 31, 2023, $2,500. Dividends payable on December 31, 2024, $4,000. Retained earnings on December 31, 2023, $45,500. Retained earnings on December 31, 2024, $52,000. Required. Compute cash paid for dividends during the year 2024. How MIT Company would report this payment on its statement of cash flows for the year 2024. Solution. Net income for the year 2024, $15,500. Retained earnings in 2024, $52,000 minus $45,500 equals $6,500. Dividends declared is the balancing figure of the retained earnings account. $15,500 minus $6,500 equals $9,000. T account of retained earnings. In the T account, retained earnings, we have the following items: beginning balance $45,500, net income $15,500, ending balance $52,000. Ending balance equals beginning balance plus net income minus dividends declared. So dividends declared equals beginning balance plus net income minus ending balance equals $45,500 plus $15,500 minus $52,000 equals $9,000. The total debit of the retained earnings account is $9,000. Dividends payable in 2023, $2,500. Dividends declared in 2024, $9,000. Ending balance in 2024, $4,000. Cash dividends paid is the balancing figure of the dividends payable account, $2,500 plus $9,000 minus $4,000 equals $7,500. Here is the T dividend payable account. So we have gone through 3 exercises on calculate dividends payable. Hope it will help you in your study and work. Thank you for watching our channel. See you again in the next video.